Okay, so people, today's video I'm going to be breaking down a 7% trade. The reason why I wanted to break this down is because I know that there's a lot of you guys, and I can assure you, I know there's some of you guys that are watching this video and you're struggling to find your direction, struggling to, use the high time frame to figure out what the narrative is, what's the intention, what is price trying to physically achieve. So I'm going to do this breakdown video so you guys, instead of me teaching you what an order block is or what liquidity is, I can actually show you guys exactly what I'm doing in order to catch these sort of positions, so then you guys can jump on your charts and hopefully be able to start applying it for yourself. Without forgetting to mention, I've had 3 people in my student section today pass their funded challenge. One of them has been with me for 4 months. 4 months, okay? So if you want to learn for free, make sure you click on the description link down below, and I'm going to see you guys straight on the charts. Okay, so as you can see, this was the current trade, right? I'm going to be breaking down exactly the reason why I took it, and I need you guys to focus on the higher time frame, right? You need to actually try and get into my brain and visually see it the way I'm seeing it, because obviously it's all well and good me waffling about it, but you guys really need to take this in. So what I'm going to do is I'm going to jump straight on the daily. I'm usually starting on the daily and the 4 hour, right? As we can see, at the beginning of the week we were accumulating around here, right? This was us just retracing. While we were retracing, we can understand our direction is bullish. We can see that we're creating new highs over here and we've got a lot of volume, right? We've got a lot of volume pumping the market, so we're getting, we're getting a nice trend form. So once we've got this accumulation over here, we can anticipate that price is probably going to have that impulse again that it's had already previously 2 times. That intention there is irrelevant because that is just trading pretty retail. Obviously, you can't just hold on to the hope that something should happen again, because if it hasn't got the reason to do it, it's not going to do it, right? So we were accumulating around this POI, but if we have a look, we are actually bullish. We are creating new highs over here. We are respecting previous lows. So we know that we shouldn't really be respecting order blocks to sell to the downside, because this is our external leg, right? Externals are trending legs. External, internal, external, internal, external. Obviously that wouldn't create a new low, but that's why I wasn't necessarily too worried about the accumulation here, because I know this was just the early people selling, right? We understand that our first point of liquidity is above all of this accumulation, all of this waffle over here, all this detail and choppiness before the down move. All of this is mitigated, right? All of the order blocks are mitigating each other. And what I mean by that is like this. So when previous highs are all mitigating each other, price would then need to come and take out the first point of liquidity. The first point of liquidity being the first point that hasn't mitigated something previous, right? So with that piece of knowledge, we now have the higher time frame intention. We know that price, realistically, if it wanted to sell, we shouldn't see the sells until price is pushed above this level. So we now know that we can look for the buyers up to that level. And don't forget, we're still on the daily as well. So the past 2 daily candles have also been bearish. So we understand that the direction has been confirmed. So if we jump down to the 4 hour, not that we necessarily need it, I only really use the daily if I don't need the 4 hours. So if I've done it on the daily, I don't really need the 4 hour. So as you can see, we have been very, very bullish. The past 2 days, we've been extremely bullish. So what are we looking for? We are looking for a continuation, right? The initiation is the beginning of a trade. The continuation is midway through a trade. So continuations usually have a higher success rate, higher win rate, because you've already got the liquidity, you've already got the volume, you've already got the direction. You're just looking at taking the continuation. Obviously, the continuation from here looks like I've just bought a random position. But if we jump down a time frame, as we were buying up, we started to slow down here. Price has then come down, sweeping liquidity, which then gave it the volume. We then retraced, swept liquidity again, pushed up again, so on and so on, right? So we're seeing nice trending legs. We're seeing that price is respecting what has to happen, which is, liquidity sweeps after liquidity sweeps after liquidity sweeps. So we're getting the liquidity sweeps that we need. Now, we obviously need to find a position. Obviously, we're trading London session. So London session is between 8 o'clock and around, my kill zone is 8 to 11. it's actually slightly different, but I don't discuss that sort of stuff on the YouTube. But this is a valid point for you to trade. Trading between 8 and 11, you can see some nice moves occur. So as we can see, as it comes to 8 o'clock, bearing in mind 8 o'clock to 11 o'clock is here, right? So that there is our kill zone. So previously we had already seen a liquidity sweep here, so that's why price has continued up, creating a new high. Then if we're looking for another continuation, we need to see a liquidity sweep. So jumping down to the 1 minute, which is the time frame this opportunity was on, if we have a look, we have a nice form of liquidity. This form of liquidity is just above a nice order block. So this order block here is super valid because it hasn't already been tapped. For it to be mitigated and invalid, we'd have to see this low here push into the order block. That would then invalidate the order block, and we'd have to see price come lower, potentially down to this order block. But because it was valid and unmitigated, we understand that this is going to be our potential, well, not potential, this is where we are going to be taking our buys from. And one thing that occurs before a POI sometimes that gives me a lot more volume and a lot more confidence, actually I meant to say confidence, is an inducement. So just before the POI, we can see that we just missed it. This low here, we just missed the POI, right? We just missed it. We started seeing the buyers come in, which is the early buyers, you know, the stupid traders who don't understand how to trade. They've got in the markets, and then we've come down, we've induced them out of their positions, so they've hit their stop loss, and that's when price is ready. Usually if we tap a POI without an inducement, that doesn't mean that the POI is invalid, it just means that it may not be ready yet. Sometimes it will react off of it nicely and continue up, but if it doesn't react nicely, beware, you may be induced out of your position, which is not necessarily an issue, because the re-entries are super important to catch, right? You want to catch the re-entry on the inducement. If I get induced out of a position, I'm buzzing, I'm super happy, because I gain a lot more confidence after being induced out of a position. I see a lot of guys being induced out, the inducement remains within the order block, it then sells down to their TP catching a 1 to 10, and they've missed their position, and they're saying, oh, I got induced out, I could have caught, 10% this and that. You need to understand that taking the re-entry is super crucial. That is all part of the process. If you don't take the inducement, that is actually outside of my trading plan. My average win rate and average risk to reward all factors in me taking inducements every single time. So if I don't take it, that's actually against my trading plan. So that's one thing I want you guys to notice, which is going to obviously give you more confidence when it comes to trading. So as you can see, we did actually retrace slightly, which wasn't a great reaction. As you can see, this was quite choppy, but first candle closed with volume after the inducement and tapping the POI, but it stops just beneath. That is your entry. You could have called re-entries, so this would be a continuation here. This was that was technically initiation of a continuation. This here is continuation of I don't even want to confuse you guys. So here you could have taken another entry after the liquidity sweep. Stops just above, or just below, sorry. So on and so on. Where else? We didn't have any more liquidity sweeps, I don't think, other than this one here. So we come down, we've induced this. We can buy, obviously I didn't take any of these, I'm just showing you for example of how you can enter positions after the first candle close and liquidity sweep. That's all we're trading off of. I mean, that's only a 2.5R, but that's better than nothing, I guess. 2.5 plus a 5.8, I don't even know, let's just say 8. 8 plus 7 is 15, so you could have caught 15R. I'm not saying you would have taken all these positions, I don't want to be unrealistic, but this is just the possibilities of this style approach. It's super important to be doing your drop down analysis, though. You don't want to be risking your money after rushing the analysis. You want to make sure that you are spending majority of your time on the higher time frame, because if you miss something, for instance, like I was explaining on the free webinar yesterday, which you can join in the description down below, if you're rushing your higher time frame and you miss where the first point of liquidity is, you then dropping down the time frames on the 1 minute, you're taking positions, you're taking 2-3 entries on the inducements, and then all of a sudden you get induced for the 4th time, and now you can't take any more positions because your max positions in a day is 3. You could have saved yourself 3 positions and caught the winner, which was the 4th inducement, because the 4th inducement was actually the first inducement into the first point of liquidity, if that makes sense. So you need to be making sure that you're marking everything out correctly, because like I say, just one small mistake can lead to multiple losses and then you missing out on the actual position. So I just spilled half that down me, but I'm going to leave that video here. Hopefully it's helped you guys. I just wanted to do breakdown videos at the minute because obviously it gives me the opportunity to, dive in about a few things regarding how we're trading, instead of just doing topics where it's like, what is an order block or how to spot inducement, this and that. You're only teaching one thing in one video, whereas this is kind of all in one, and then you guys can study it a bit better. So I'm going to leave the video here. Make sure you join the Discord, completely free. Ask me any questions. I'm going to see you guys in the next video.